biggest game in town, however, is what is the Solana of this cycle? If you remember, Solana last cycle was huge. So was Avalanche, so was Polygon. There was a few of them that really got the narrative, and it really Solana won out that as the next big thing. The others are still fine. They've got activity and stuff going on, but not the scale of Solana. The question is what is that one of this cycle? Because you can make some real money. But this is where people start going too far out the risk curve. You really need to see what is getting some real adoption and a real narrative and real developers working around it and stuff like that. That remains to be seen, but that game is still to be played. There's two. One, as a caveat, I set on the foundation for SWI, which is an incredible project. That and Aptos are both Move based. SWI kind of rewrote the whole thing from scratch and have built other stuff around it. The other one is the Cosmos ecosystem. So Celestia would be the obvious one there. There's a few others within that ecosystem.
Raoul Pal highlighted the high potential of a next-generation smart contract altcoin project. Paul drew attention to the Layer 1 blockchain SWI and noted that the altcoin is starting to look attractive in terms of price. Paul said that he is analyzing all the major altcoins for the next Solana-like opportunity, and SWI seems to be one of them. According to him, SWI is showing signs of breaking away from most altcoins and could be one of the fastest horses in the race. He said that SWI is poised to make a significant breakthrough against another core network asset of the Layer 1 blockchain, Avalanche's AVAX. He also highlighted that SWI is starting to break out of a downtrend against the Celestia decentralized network. Against Bitcoin, he said that SWI broke out of its downtrend. Paul mentioned the potential risks that SWI could face. He noted that token unlock events are underway, but the worst is over and the main problem is demand. Paul said that supply is already known, but demand is the driving factor. Paul mentioned that SWI is a fully diluted, high-valuation altcoin, and some people don't like these assets. He said that he likes to find places where price movements have outpaced the current narrative. FDV altcoins have a high market value with a low initial circulating supply, which creates significant dilution potential in the future. According to Raoul Pal, 100x should be easy if you pick up the next Solana. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
Look, put 90% of your assets in these core crypto. Call it free for now. The three biggest ones with proven network effects are Bitcoin, Ethereum, Solana. And think of that as a risk curve. Bitcoin the least risky, Solana more risky. It's earlier in its adoption. It should outperform, all things being equal. And then you can have 10% where you can try and make your 100x. That will end up being your wallet of shame. You'll have a bunch of stuff that goes to zero in there that you never get rid of. But you can't do yourself damage if it's only 10%. And if you get it right, great. You're going to add, another 100% onto your portfolio, but you can't mess it up by doing it. So enjoy altcoin season. Realize that it should move ETH and Solana more. So you should get some really good returns out of that. But don't overextend yourself when you go too far out the risk curve.
When it comes to financial advice, Paul highlighted the importance of avoiding leverage when trading or investing in cryptocurrencies. This approach minimizes risks and prevents the amplification of losses. This is a key factor in maintaining a healthy cryptocurrency portfolio. He advised against succumbing to the fear of missing out, FOMO. In a market where new investment opportunities are constantly emerging in the form of new narratives, altcoins, airdrops, and ICOs, this principle can help maintain focus and discipline. Paul encouraged investors to resist the temptation to jump on every trending investment and instead recommended a more thoughtful, research-based approach. His piece of advice also concerns portfolio concentration. He proposed investing in a limited range of assets, suggesting focusing on the top 3 to 5 cryptocurrencies. This strategy allows investors to better manage their portfolios and understand the investments they have chosen. Similarly, his fourth tip is to trade only a small portion of your portfolio, less than 10%, in high-risk, high-reward companies, called the Deegan bag. This allows investors to explore potentially lucrative opportunities while preserving their assets. Basically, you can capture most of the returns by just being in Bitcoin, Ethereum, and Solana. And if you need to feed your inner degenerate, put 80% in things like that and 20 or 10% in the things you want to bet on. That way, you can feed your inner diggin', but you won't blow the whole deal. As Bitcoin continues to hit new price highs, several investors have been speculating about the next significant price rally for the leading cryptocurrency. Paul predicted that the asset would cross the $250,000 mark. He also shared speculative price action for Ethereum and Solana. The speculation is fueled by the current momentum of Bitcoin spot ETFs, an investment vehicle that has raised billions of dollars in the U.S. market. Over the past 2 months, the Bitcoin ecosystem has seen an impressive surge due to active purchases of these ETF products by several companies offering them. Paul's speculation also comes ahead of the planned Bitcoin halving event, a process in which the block reward will increase from 6.25 Bitcoin to 3.125 Bitcoin. Paul has moved away from Bitcoin and other altcoins, moving 90% of his liquid assets into Solana. Paul explained his major portfolio adjustment by saying 90% of your liquid network is basically allocated to Solana right now. You don't have a lot of Bitcoin right now. This isn't to say you don't like Bitcoin, you think others are going higher. It's that simple. Solana's impressive market performance supports Paul's bullish outlook. Solana is up roughly 75% year to date, outperforming Bitcoin and Ethereum's gains of 58% and 42% respectively. Paul also compared Solana's user experience to Apple's ecosystem, highlighting its elegant design and efficient closed system, though he said Ethereum was much broader and much more open in terms of other things that can be built on top of it. Franklin Templeton had also backed Solana, leading to speculation about the Solana ETF. Solana has seen great adoption and continues to mature, overcoming growing technological challenges and highlighting the potential of high-performance monolithic architectures. However, regulatory challenges could be a hurdle for Solana ETFs. For example, Solana does not have the CME futures market, which is typically required by the U.S. SEC. However, a statement from an executive at the asset manager has raised uncertainty. Robert Mitchnick, head of digital assets at BlackRock, commented at the Bitcoin conference on the success of Bitcoin and Ethereum spot ETFs, but also revealed that there is not much interest in crypto ETFs beyond Bitcoin and Ethereum. Their focus is mostly on Bitcoin first, then a bit on Ethereum, and today there is very little interest beyond those two. Paul does not think we will see a long list of crypto ETFs. As the cryptocurrency market experiences a surge in the second half of July, analysts are bullish on some altcoins and Solana in particular. Some experts estimate that Solana's market cap will reach $100 billion.